Good morning. Thank you very much, Olga. Thanks for inviting me to come here and share my latest thoughts on the topic of tokens generation. Some of you know me from my blog, perhaps. I've been writing about the topic for the last 4 years, which in blockchain terms is an eternity because we are going by dog years. So that would be like 16 years, more or less. And how many of you have read? Thinking in a few thoughts, a few topics that I picked specifically. And I'm going to start with a question. If I were to ask you, so what is the state of the market today? Is it excellent? How many would say it's excellent? The ICO market, the state is excellent now. How many of you would say it's good? How many, okay, 20%. How many would say it's bad? Bad things are happening. Yeah, another 20%. How many would say it's ugly? Okay, I think, yeah. Well, it depends on the day. It depends on the week. Of course, this week has not been good if you have been looking at the price of tokens, the price of cryptocurrency. But unfortunately, that is the wrong measure to look at. And this is a sign that the market is very nervous, because we keep checking the price of cryptocurrency. How many times do you check the price of cryptocurrency? Admitted, I mean, you don't have to tell me, but a lot of times it means that something is not right. I mean, how many of you check their blood pressures every day? You probably have high blood pressure, right? That's okay, but you check it because there's something wrong underneath. And that is really an issue that I see right now. And I'm fortunate that a lot of people want me to listen to what they are doing in this space. So I get to see a lot of viewpoints. And it gives me a good idea of what's going on. And even including all this range, the good, bad, and ugly, and excellent, and so on. And I'll give you a confession. My father is a doctor, and his father was a doctor. And everybody in my family wanted me to become a doctor. I did not become a doctor. But now, after talking to a lot of startups that are involved in the ICO space, I feel like a doctor, because I am giving them some bad news sometimes. And obviously, you go to the doctor, they tell you things you don't want to hear. And that's kind of where we are right now. So who are we? Who are we here in this room, in this sector? I showed a version of this slide at the Token Summit in New York last May. This is an updated one. So who are we? We are on the technology side. There's blockchains, tokens, and startups. And this is how it started. This is when it was a pure environment. And then what do we have now? We have lawyers, regulators, we have advisors, we have funds. Funds are coming. More than $1 billion in about 70 funds have just started recently. Think about the impact of that. Accelerators, there are now accelerators and labs that are just helping companies become ICO companies. Analysts, a lot of analysts are emerging in the space. Some of you may be thinking, why do I have, what happened here? Okay, why do I have lawyers and regulators together? Honestly, I ran out of space on this slide, so I had to make it simple, like 3-3. But actually, there's another reason I thought about, because the lawyers and the regulators, they are talking to each other. I mean, and they hold the key to us going forward in this space. If you're doing an ICO, you have to talk to lawyers. You're not talking to regulators. But the lawyers are talking to regulators, and then there is hope there, I think. This is an important segment, and there's been an explosion of ICO service providers. It's a new terminology. It didn't exist before. If you Google ICO service provider, you probably won't see a lot of mentions of it. And maybe I've missed a few here. There's probably 25 of them on this slide. Many of them are in Switzerland and other parts of the world. I'm going to be publishing this list on my blog in the next few days. I see a lot of cameras wanted to capture that list. Yeah, you gotta talk to them. Talk to them, yeah, if you're doing an ICO. And I mean, for good and bad, I know most of these people, obviously. But they are the ones that are driving the market right now to some extent. I mean, we could put lawyers in here because you need lawyers as well to go to the market. But these are more technical and marketing and kind of business orientation types of providers to help companies go and raise money. But there's a warning here. I mean, there's a lot of exuberance here, a lot of excitement, and there's going to be more of them going forward. I wrote this a few months ago. At the end of the day, really, there are 4 characteristics when trying to do an ICO. And one thing that has not changed is the startup characteristics are still there. Yes, crowdfunding is about disrupting the venture capital model. And yes, we are not taking money from venture capital firms. And for the first time in June, by the way, June was an important month. Why? Because for the first time, the amount of dollars that have gone into ICO companies have exceeded the money that companies traditionally raise via venture capital funds in the early stage sector, in the angel and seed round. And that number was $600 million. I knew there was something going on in June, and I tallied up every company that was doing an ICO. There were 37 of them in June. And the total amount was $600 million. The total amount raised in seed and angel is 550. So it exceeded that. And we have more than one per day. So this was a turning point. Now we cannot keep track. Crypto sale resiliency, how good is your sale of the token itself? How good have you thought about it? Operational transparency, I'm going to talk about that more than once. Very important topic going forward. And the levels and the standards of transparencies that will be expected, I can tell you for a fact, is going to be higher and higher and higher. And this is one of the weak points today. And the business model, obviously. So we have to ask ourselves, why are you doing a token? Why there is a need for what you are doing? Very important. I see 4 systemic risks right now, 4 weak points in the system. I talked about this in my last blog, which I labeled Safe ICO Practices, SIP. The level of disclosures, again, is not up to the standards. When I did my token filings project 2 months ago, I wanted to publish all of the data that ICO companies were putting forward. And I had about 35 different data points. It was very difficult to find a lot of this data because either it's not there or it's in about 10 different places. So we're going to get better. We need to get better at how we disclose everything if you want to get the regulators on our side. Terms and structures are all over the place. It's whatever. I mean, it's great because the entrepreneurs are very creative. And they are being very creative in the terms and structures of the token. Distribution and how they allocate tokens, whether we sell 10% or 50% or 90%. It's a weakness right now. Post-sale transparency, I've said that more than once already, and that is an important aspect. It's not just important to just say, we're going to do a transparency report. The quality of the transparency report is as important as just doing it itself. And then finally, value versus valuation. That is the big disconnect right now. So the valuations are all over the roof, probably are 10 times more than they should be. On a relative basis, they're okay, one to each other. But the value is not there yet. We don't know yet because we need users. So let me ask you, how many of you, I'm sure all of you own some tokens or cryptocurrency, right? How many of you own some kind of cryptocurrency? So 99%. How many of you own a token or an application where the token is being used in the application, not for trading, yes, for the actual usage in the app? Very few, 10, 15%. I asked that question 3 months ago. It was about the same number. Maybe it's a little bit more now. So, but that is the disconnect, because a lot of the users are buying the token to flip it or to make money. They want 5x, 10x before there are even users on the system. And that is a big disconnect right now. And another one that I would add here is that I don't like to see a token being traded before the network is operational, before the application is operational, before the protocol is live. And right now, this is getting a bit out of hand. We have a token sale, and a few hours later, it's already traded, and it's not even out yet as a network. That's not very good. It's not healthy. People would like to emulate Ethereum in many ways. I want to remind people that Ethereum, the token, you could not trade it for a year until after the sale. The sale happened in August, finished in 14. You could not trade it until the network went live. For a year, you had to hold on to your token and pray a lot that they would do what they said they were going to do. I would love to see more of that happening. The dollars. We can't talk about this without talking about the dollars. Two numbers. How much was raised so far in crowdfunding, more or less? The number is public. In the last 12 months, $1.7 billion US dollars have been raised in this field. What was the maximum market cap that we reached recently? September the 1st, $172 billion was the total market cap. So what's the correlation here? That's my own correlation, 1%. It means we have $170 billion. We were able to put in 1.7 into ICOs. And that's what's good about this. A lot of these people that have made gains in the crypto capital markets have been very generous, and they have been putting the money back into ICOs. And this is healthy. Right now, we're a bit on a down. It's going to go up again. So if we go to $250 billion, you can expect that we will have $2.5 billion at least on a trailing 12 months basis going into ICOs. So that's kind of roughly my correlation here. So keep looking at these numbers. Valuations and analysis here. I meant by valuation analysis. So a lot of people are coming forward trying to analyze tokens and coming up with fancy words like token velocity or network value and discounted whatever. I mean, these are all good tries, but really, we don't have a lot of good data in terms of analyzing and correlating the token value with actual what's going to happen underneath it. Because many of these tokens that represent protocols or applications don't have users yet. So you need users, you need an ecosystem. If there's any one parameter that is worth looking at, it's not just users, it's the ecosystem itself. Why is Ethereum and Bitcoin the leading cryptocurrencies? Because they have an ecosystem behind them. An ecosystem is not just users. It's a lot of users. It's a lot of developers, a lot of startups, a lot of big companies. And it has to do something. It has to be used. Bitcoin is used as a currency of standard for going into these ICOs. Ethereum is used as a currency to generate other crypto capital. So there has to be something significant here. And today, there's a lot of disconnect between value and valuation. Token types. I mean, this is a big topic. When people come to me and they ask me for advice, the first thing I talk about with them is, can you show me what your token is going to do? What is the token functionality? And this is where the entrepreneurs have been very creative. And they are coming up with all kinds of token functionality. And this is where the regulators will come and say, well, this is a security, no, it's a utility, and so on. But really, and I've written about this for a few times, and I'm trying to sum it down into simple kind of categories. And I've come up to these 4 categories. It's either a right, which means it's a right to be participating in the network, maybe. It's a right to maybe vote. It's a right to be doing some kind of function. Or it's a reward. You earn something for a kind of work. I mean, the work is very important in the token world. If you think about it, it started with Bitcoin mining. What is mining? It's a kind of work. It's a computational work. It's a work that machines do. And now we've taken that concept into the humans. Now we want to get rewarded for human work. And this is where the token comes in. And in many cases, it is the future of work, where we're going to be rewarded by tokens. Many of us spend an hour on Facebook, but we don't get rewarded for that. They take our eyeballs, they resell it as advertising, and we get nothing from them. New models are coming where we do work, we get rewarded. Ownership, yes, there is going to be fractional ownership that the tokens is going to represent. Real estate comes to mind. Or it could be a toll. If you think about Ethereum as a gas, the gas is a toll. You use the network, you run a smart contract, you pay for gas. And these are some of the token types that I'm seeing. Two key questions again. What will the token do? That is the first question. But also, why a token? Why a token? And now I'm flipping the question. Yeah, I'm asking people, so what is the token going to do? But I'm also asking them, why is there a need for a token? And you have to ask yourself. And right now, I'm seeing a big wave of companies just doing an ICO because it's easier to raise money. And everything is now coming out. In every sector, you name every sector, there's at least 5 or 10, and soon enough, 15 companies trying to do the same thing for a particular sector. Very similar to what happened with the internet and the web in 1999, 2000. There was this phenomena called B2B marketplaces. And there wasn't any industry where there wasn't a B2B marketplace that was emerging. At one point in time, there were 200 of them, and I was counting them. I was part of that industry as well. And when the crash happened, do you know how many of them remained in business? 2 out of 200. I think we're going to have a better track record in the ICO space. But ask yourself, why a token? Failures. How will this end? Nobody knows. Nobody knows how will this end. Are we going to crash in a big way? Are we going to crash in small ways? Are we going to go up and down and then up again? I mean, I don't mind if small ICOs fail. That's okay. That's okay. But I'm going to get worried, and we should all get worried if the big ones fail. That is why I sounded the alarm bell when I was seeing some of these ICOs raising $100, $200 million to 50 without even having users. That is a risk. We hear about, there's car accidents every day. It doesn't make the news. It's okay. It happens, unfortunately, even if lives are lost, unfortunately. But if a plane crashes, God forbid, if a train crashes, it makes the news. And these are big failures. So that is the analogy that we have here. I hope we can be resilient when we have failures. Failures are good because we learn from them. And let's hope that we have smaller ones. Regulation, that is the big one. That is the big one. And there is a precedent to that. Right now, the regulators are scratching their heads and are trying to wonder what to do, what not to do. And so far, it's been okay in most places. But there's something brewing. I can tell you that for a fact that there will be some positive changes going forward. And there's a precedent. The precedent is, how many of you know or have heard of General George Doriot? George Doriot. Remember that name. I wrote about that a few months ago. He was the father of venture capital. In the 1940s, he was the first VC. And at the time, they were running against the existing regulations in the US, the Securities Act of 1940. And he forced a rewriting of the securities regulation to allow for stocks to become a new asset. Not too long ago, stocks were not accepted as a way that you pay into it and then you get a stock which is a fractional ownership in a company. That was something new. And he had to fight the regulation system to make stocks now. Now we have stocks as an acceptable asset. It's regulated. Stocks, bonds, commodities are regulated. And we have unregulated assets as well in the alternative markets. And tokens are going to be a new asset class. That is where it's headed. A year from now, I can predict it's going to be regulated as and accepted as a new asset class. And that is really the hope that we have. So the regulators have a dilemma whether to apply the existing regulation, which is not good, Because if their starting point is the existing regulation, it means they are not admitting that there are changes ahead. But if they start to change the regulation and say, well, this is a new asset class, it has some interesting properties, it's different, it is not always a security, and this is why, and these are examples, then there is hope. And I see that hope coming. Final thoughts, the 3Ds, do it right, don't hype, and deliver. That is really, these are pieces of advice for the startups, the startup community, because they are the ones that are driving this really. Surround yourself with real advisors. I've said that more than once. A lot of companies are putting advisors on their list initially to get to the sale, but getting to the sale is only the beginning, and finishing the sale is only the beginning. It's the beginning of your life as a startup, the beginning of your life as a new protocol, as a new application, as a new platform. Then you become like a startup. There is no changes. The startup laws have not changed, will not change. You still have to get users. You still have to get developers. You still have to have a brand in the market. You have to communicate what you're doing. You have to have support. You have to hire people, fire them. You're going to have to deal with bad things that happen. So surround yourself with people that have been there, mentors that have done startups, that have experience. Don't over-legalize. You can be perfectly sound from a legal perspective and go and raise millions of dollars, but the idea is a bad one, or the team is not great, or the technology is not great. And then finally, I mean, really, we are doing this because decentralization is important. It's peer-to-peer. It is a requirement. I am seeing now cases where the token is being used in central setups. The blockchain is about decentralization. That is the key tenet. Let us not forget that. There has to be a decentralization and a peer-to-peer component, because that is part of the change going forward. That is part of the innovation that we have to see. If you don't see that, we're not doing too much, really. We're just doing another central system for another one. And then when the music stops, because right now it is quite loud, there is a lot of exuberance, a lot of excitement, which is great to an extent. To an extent, right? When the music stops, what's going to happen? Then we have to count how many users do you have? How many developers are using your platform? And that's really what's going to count. Because the way to evaluate these companies, the way to assess whether there is success or not, is not going to change. It's going to be about the impact you're having in the marketplace and what users are doing with your product, what developers are doing with your platform in terms of developing new applications. And that is really what matters the most. Thank you very much.
Thank you, William. Thank you so much for these insights. So let's hope the music doesn't stop anytime soon. And let's dive deeper inside the token economy, which is the title of the